Okay, good morning, guys. This is Simon with Trade and Perform Coaching. It is Monday, 7/20/2020. Just a quick disclaimer. This is the market preview for ES. And I'm going to throw CL in there as well today, actually. So just quick disclaimer, important disclaimer and reminder for all traders and investors. This webinar is for educational purposes only and not a recommendation to buy or sell any particular financial instrument. Equities, futures, options, and currency trading have large potential rewards, but also large potential risks. You must be aware of the risks and be willing to accept them in order to invest in the futures and options markets. Do not trade with money you can't afford to lose. The website is neither a solicitation nor an offer to buy or sell equities, futures, or options. No representation is being made that any account will or is likely to achieve profits or losses similar to those discussed on this channel. The past performance of any trading system or methodology is not necessarily indicative of future results. Please consult your registered financial advisor and your risk trading plan before ever investing or trading any financial instrument. Okay, so number one thing I'm seeing this morning when I come in on the profile is that this whole area from 32.25 to 31.96, right? We're just building energy in this. So I would expect a vertical move at some point, right? On tap this week, we have the president is meeting with his staff, I guess, whatever you want to call it, to discuss the outline for what they want for the next round of financial assistance to U.S. citizens, right? That translates, that is QE, guys. That translates into QE. Number two, we have earnings this week. The two biggies are Microsoft and Amazon, right? European Union, I don't know if they came to a resolution, but last night they were discussing what form of quantitative easing they're going to have. When you keep hearing this, we're going to supply capital, okay? Non-traders think that goes out into the world. We all know that goes directly into the pockets of Goldman Sachs, JP Morgans of the world, and they put it into the market. It just creates really cheap money and lets them drive the market up, okay? Long side is easier than short side, right? So the most important number that I would put on my chart here is this 32.73 to 32.80. So first of all, 32.38 and 32.29.75, this area, very important. We'd like to see it actually get above and take out the stops above either one or both of those locations and set up for a potential short. If we're going to look for a short, that's where we're looking for a short, okay? Above that, if we have a trend day up or we have a drive higher, we would eventually look to get to 32.73 to 32.80, followed by Dalton's gap fill at 38.06, and then 33.17 to 33.20 is a naked open points of control above, okay? So these are all areas where stops are being, so you got a picture, right? There's all stops located behind these key areas, right? This is where we want to catch people out in order to set up a potential short. For the longs, right? I'll throw this in real quick. This is value area high. All right, it's all overlapping. Value area low. I would really prefer not to take a trade between that 32.20 and that 32.08. That area has been well auctioned, right? And we're all in agreement, meaning all market participants are in agreement. This is fairly priced. We've negotiated price in this area for 3 days. We don't need to really continue the negotiation process, right? So this area, 32.20, 32.08, right where we're opening, I already know I can relax because as a disciplined trader, I want to take trades in locations where it's easiest. I don't want to have to try to catch everything. I want to catch everything that fits my parameters, right? Which is a big difference than let me try to trade everything and just try to make money randomly. Next, the two areas that are key for getting long today will be, first of all, below 32.08 and a quarter with an hourly stop, 31.96, 31.90, right? And then we have an anomaly. It's actually a large anomaly. I highlighted the back of the anomaly because that's what I'd be hunting. 31.85 to 31.82. There's a small anomaly at 75 to 70. I don't really think we're going to get much past that. That would be 44 points down. We'd really have to have a significant news event. And then I'll post up the levels below, but I don't think we're going to get there. I'd really like a shot at getting below 31.96 or 31.90 for a balanced day move back to the mid. This 32.14 on either end of the extreme makes a great target because it's the prior day's point of control and acts like a magnet. It's generally a horrible place to initiate a trade. Okay. it's Monday. Usually we get balance, meaning when the highs and lows get broken, it pushes back in, right? But we also have a news environment that's beneficial to the market. So this gets tricky, right? If we don't get it to dip down, we don't get location like on Friday, right? But you also got to realize that for our trading, right, when you look back over weeks and months and days that add up, you really just want the best setups, right? So, like for example, last night in Asia, I was watching Asia. It didn't actually set up for me the way I wanted it to, and I didn't have the energy to sit there and trade it. But let's go see how this looks. Here's the 5-minute chart, which translates that. So this is last night. That's a funny looking chart. Hold on one second. There we go. So here's yesterday evening, right? So this is where we opened up. You can see we dove all the way through the value area, right? So we learn from repetition of what the market does, but only if we integrate it and know, hey, that's what it does. Right? Like I said, this would be a horrible place to try to stick a trade, right? Could it work? Well, sure, it worked late Friday afternoon, but if you look through here, it just swept this whole area, right? If you just know, hey, I don't want to take a position one way or the other between 32.20 and 32.08, your life gets a lot better all of a sudden, right? We come down. This is prior day's low. See how we didn't get below prior day's low? This is where I was looking. I wanted to get below that 31.96. We didn't. You come to 1 a.m. We do finally get below the first time, and then we take out hourly lows, right? So what does that look like from an hourly perspective? Well, here I can even point it out. We can just flip the chart. 5. Okay. Here's the hourly perspective. This, right here, this is our highest odds location. Okay, from a day time frame standpoint. So you'll see over here, first we take out the hourlies here. Okay, I was looking here. I did not get set up long. Okay, then we take out the hourlies over here. Right, so then the natural question is between 7:20 and 2 a.m., 3 a.m., did we get set up for the long? So let's go look. We'll go look. It's usually pretty slow. We'll go bang out a 1 1/4 chart. Somewhere in here I have a 1.25, 1.5, 1.75, 1.5, 1.25. Okay, so there's that big yellow line at 31.9650, right? There's 2 in the morning. Okay, so let's go through the process of what we're looking for. We already know we're at a daily time frame and an hourly time frame, right? First double arrow below, verified bar, right? We know what that means. Next bar below, verified bar. Now I want price and point of control above. Long, right there. In addition, right? In addition, stopped out buyer, stopped out buyer, stopped out buyer. So these are my last 2. Nothing else. That means this guy becomes my breakout zone. I'm going to add it. Right there. I get above that. I'm going to change the color. Okay. Now, let's talk about money for a second. I was talking to someone about this last night. we don't know where this might go today, right? It's overnight. So first of all, if you took the trade properly, you're long 31.9650. Your stop should have been somewhere below this low, between that and 6 points, right? But that was basically a 7-point stop overnight on a 1 1/4 trade, right? Next, you broke over your last stopped out buyer right there, right? So you took it 31.96. You are up to 32. Let's just call it 15. Okay, that's 19 points. I want everyone to do the math and think about it for a second. I had an interesting conversation with someone in the room that says, geez, I really feel like I should be accelerating my capital, right? So I'm going to go off script a little bit, okay? When I'm teaching someone to trade, right, I tell them, scale 5 points, scale 10 points, and leave your trailer, build size, right? But that's when you're new, okay? Because you've got to know, hey, what does it look like when I scale? But look at all the things you had. List them out. You should be printing this chart and print it out, right? You took out a daily low, right? You had an algo fire below hourly and daily lows. Big signal for us, right? You're with the momentum of the market to the upside, right? And you have 2 ways of handling this trade. 3 ways, actually. You can scale to 5, 10, and if you have the 3rd contract or more, let it run, right? But you should also be keeping other books. Like when I get this set up underneath those stop out times, how many times does it just go for 15 or 20 points and I should just leave my position on, right? How many times does it come back and cost me 7 points? I need to build my account to where I can handle that, right? The structure and scaling is so that you have some semblance of order to your thinking so that you make money on a regular basis. Okay, I want to say that again. This scaling program or process is there so that you have a semblance of order in your mind as to what you are looking for, right? But you also have to go sometimes and look at this picture. There's someone in this room I'm speaking directly to and they know. I think they're in the room. Let me look. They are. I spoke with them yesterday evening. When you get this set up and it has everything you are looking for, okay, I'm not going to say them by name. They know who they are. And it has everything below the daily, below the hourly, trigger, stopped out buyers. You're above the stopped out buyers. Leave this trade alone for 20 points, right? If you have 3 contracts for 20 points, that's 3K, right? That's enough for you to feed your family for 2 weeks at least, in most cases, right? 3K is okay for a trader that's starting out on 1 day session, right? Let's say you go through the month and you say, Simon, I can only trade when I've taken out a daily low, plus an hourly location, plus I have my stopped out buyers, plus I get my algo signal below the hourly and below the daily. Right? Let's say that only appeared 3 times a month. But you know what I do, Simon? When I get that, I either take the loss or I ride it all the way to the other end of the range. Right? That means that guy 3 times a month, right? And I think that's conservative, will pull out between 15 and 20 points. 20 points is $3,000 on 3 contracts. He does it 3 times a month. Now, let's say this trade only works 50% of the time, right? So that means, and he goes, and let's just make the math simple, it's 20 points each time, okay? He's going to scale right here. He's out for 20 points, okay? And the other 3 times, it fails and it costs him 7 points, right? So that means if he gets 20 on 3, that's 60 times 3. And let's say he fails 3 times, right? So that's 7 times 3 is 21, right? He's still coming up with wow, my math is bad, but I believe that's 39 point in his favor, right? So this is what I mean by when you get location, right? This is very, 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 very important. I can't stress how important it is. When you get location and it has all the stars aligned, you got to go, damn, give me a chance to make some money and step back from the thing and let it pay you. And it happens over and over and over. Here's the problem with the trade. You're going to find yourself bored a lot because it doesn't show up that often, right? Maybe in a week you'll get 5-6 shots, and it may happen when you're asleep. It may not happen during the day. But if you wait for it, all you need is 1 to 3 contracts. You get, you get $3,000. That's cool, right? There's other places to enter this trade too. I'm going to show you. So this is going to end up being your left shoulder over here, right? This is going to become your head. That makes that 3196 a really important location, right? Now what we would look for over here on that right shoulder, right, is the same thing. So see, as we're coming down, we're going to stop this guy out. We'll stop this guy out. And that is it. Here's 1, here's 2, and what you're looking for is these algos to line up in a parallel fashion. And I believe they do so right here. See that? On the right shoulder, you end up with a parallel alignment. Do you see that? That ends up being a 3211 and a 321250 to 3223 long at 7:28 in the morning. That's the second way to grab a high odds shot. But when you're taking the trade over here on this setup, you have to scale, right? When you're down here, you're in perfect position, okay? We may not always be up for that, but this is your next best location, right over here. With those double algo, let the algo guide you into a location. Now, on that you have to scale because you don't know that it'll keep going. You're already well off the low. And then obviously this right shoulder is higher than this left shoulder. But let me tell you something about that. When the right shoulder is higher than the left shoulder on a head and shoulders, that's incredibly bullish. Okay, and you actually look for that. Okay, and that right shoulder is valid all the way down to 3196. So this morning, as we push down to 3196, be aware that's a head and shoulder pattern, right? So you have pieces, right, by the process that we've put in place, right? When you look at this, you have pieces, and anyone in the room should be able to do this. That's nothing magical, right? Again, going off the day time frame. Horrible place to put a trade between these two purple lines, right? That saves you. You're over here, right? You're either targeting this hourly stop below or this hourly stop down here. It didn't set up. Believe me, I was looking. It did not set up for me. Comes back again and takes out all these hourly stops over here to the left, and it triggers for you right down here at 3196. Not the low, but close. And then it rewards you with a push all the way up to, where's the first target? The point of control, then all the way through value area, and then where are we looking for the potential short? 31.25, 32.25, 32.29.75, 32.38, and there's a mid of a half gap up here somewhere. I don't know. I guess I don't have it marked off on this chart, but there is a mid of a half. Oh, there it is. And then the super extended 32.73 to 32.80. Okay, everyone in this room should be able to pull off that trade. Okay, if I was up, I'd have taken it. And when I had this conversation with this person, I felt bad for them, right? Because they know so much about the market and they have a hard time putting together the P&L, right? And part of that problem is they start thinking after they've taken the trade. But here's my solution to that. If you get all of this together in one location, what do you have to lose by just going, fuck it, either stop me or pay me? Right? What do you have to lose from that when we've seen over and over and over again, right? And I'm going to show you the other piece here, right? We get the algo, we get all the pieces. Here's the hourly chart where that's set up, right? So you're all the way over here, right? You've taken out all these stops. You're at the day low, etc., etc., etc. You've rolled down. What do you have, at least, if you're getting long on this 31.96, 31.92, whatever this area is? What's the odds that we're going to roll back over and take out that swing, right? Or even better, this big bar down, right, will usually get taken care of on the other side, which we just did this morning, right? See how it just came to the other side of that hourly stop out and then rolled back down? We just did that. We just accomplished that right now, right? I want y'all to look at that, and I want y'all to look at which side the market's trading easier on, and then realize, hey, when I get these, it's very likely that I'm going to be able to push people out of the way, right? And you only need that one trade. I can't stress how important it is that it is okay to walk out on a day where you've gone, I've made $3,000, and that's on 3 contracts, and that's cool. I'll be back tomorrow, or I'll be back Wednesday or Thursday or Friday or whenever that shows up again, and get paid. Because guess what? It did it again right over here. See this on Friday? This right up here. Right now, it didn't roll over until Sunday evening, right? And I'm going to show you something. If you look on this chart, it does it over and over again. This was a key area. That was a triple top right up there, if you remember, from way back in February. That 32.30 and a quarter. Where did we roll? All the way to the other side. Took out the stops. Where did we go? All the way, or attempted all the way to the other side. We come all the way back down. We take out the stops. Where did we roll again? We didn't roll all the way to the other. Well, eventually we rolled all the way to the other side, but even within an immediate time frame, we still rolled all the way up here. When we got short up here, where did it roll? They at least attempted to get back down. Again, it's a long market, right? And again, when we come and take out the stops in an area, where does it roll? Up to the other side. That roll keeps occurring, and they're 10 to 20 point rolls, right? And it will change your P&L. If you're going to this is a change for me, right? Because I used to say, take your 2 points and run, take your 2 points and run. And I'll tell you why I did that. Because when I was running the room, I could keep people break even at take your 2 points and scale and move. And what I figured out is my P&L suffered because I started doing the same thing. And I figured out you got to let the damn thing run, right? I didn't figure it out, but I figured out from a training perspective, you got to let a big portion of that trade run, right? So if you're new and you never take a trade off, then yeah, you've got to scale, right? But you've got to be able to distinguish, right? You've got to be able to distinguish when you're on the side that the market's on and where the big trade is coming from and what that algo setup looks like. And we covered multiple things, so I'm going to cover it one last time and then I'm going to shut up, okay? We broke below a daily low. We broke below an hourly low. We got an algo signal and we had stopped out buyers, 2 sets of stopped out buyers, right? And then we pushed. That's what happened on this trade right here. And it wasn't like we said, oh, we could have caught it. We had the process for capturing it. But then here's where I see people failing. I'm going to assume overnight you're on a 1 1/4. And they're going to come up and they're going to go, well, maybe it'll retrace to the 50-60. Or I've gotten an algo that says we're going lower. Or I've trapped and it might come back down and I'm going to take it all out. And what they do is they're brave up here and they bail on all of it over here like, oh, I gave back 10 points. I'm out. I'm done. Right? When they don't recognize that they have a head and shoulder pattern that could really extend up pretty significantly. And then the last piece is they get their 10 or 20 points and they don't account for how much energy it took for them. If I had to hold that all night, I'd be pretty tired at this point. I might say 20 points is good enough for me today. And then focus on pushing your trade size up. And that's what I mean by you don't have to trade your max size to get it. I'd rather actually see one person unable to scale but target the other end of the range with one than someone trade 5 contracts and blow out for 4 points every time or 3 points every time. It works, the P&L's there, but I would encourage everyone, once you get that trade at the peak location and have what peak location looks like, right? Let that trade sit there. Let them stop you. Because more times than not, you're going to get paid. Now, if the environment changes and we break to the downside and we have that 2 or 3 week period where there's a lot of selling, yeah, you're going to have to flip that strategy on its head just like you would for the short, right? If you look over here this morning, right? So this is not an optimal short location. Why is it? Let's look at the other side of the coin, okay? This is not an optimal short location, okay? If we look at this 32.18, 32.19, right, we come to the hourly, right? First of all, the peak or where all the stops have to be sitting, have to be right here. Secondly, if we look at our profile chart, we already stated 3208 to 3205 is prior day's value area and its overlapping value. This is not a great short location in my opinion. Okay, outside of 3220, maybe, right? Next, I'm going to keep going on this. So at least I want to enter my trade above this. Okay, I did not take out a key hourly location up here. I did, right? What I did have is I have stopped out seller, stopped out seller, stopped out seller. This is the guy I need to break below right here, which means this is what I need to break underneath to break lower, right? And I finally get underneath. This bar is not verified. This bar is verified. Here is my short trigger on that bar. Now, did the short work? It did. I had two stopped out sellers, right? I had two stopped out sellers. I pushed to the very top of the balance area, but I did not take out my key hourly stops that I wanted to take out. So that automatically goes to a B grade trade, right? It goes to a B grade trade. That's all there is to it. Number two, if I take this trade, right, I have to scale this. Right now, the fact that we swept this whole area, that's not a shock. But what I see a lot of traders doing is going, oh, I had everything but maybe I should have taken that. There's nothing wrong with taking this trade as long as you're willing to live with the stop that comes along with it, potentially. Okay, there's nothing wrong with taking that trade, but it's a B grade trade. Again, the guys who are making a lot of money and gals, they're waiting for the A grade trades, and then they're letting them push, and they're not exhausting themselves with in and out, in and out. What they are having to deal with is some boredom. So I just want to stress that enough so that you can see. And there will be occasions where we will get these setups, like especially in hard down markets where it won't give us the prime setup, and we'll be forced to take those. But I don't think anyone in the room could argue that we're in a hard downside market where we should be aggressive on the short side. If anything, it should be the flip, right? We should be aggressive on the long side. All the momentum is going to the upside, right? And we should be looking for this, right? If we look at this right now, what I'm saying is, geez, I hope they do sell it. I hope we take this out right here. That's what I'm saying. Please, come over here. Get this guy. Get this guy, please, for my sake, right? Don't just take out the hourly prior, which is all we did here. We came down, we just took out the prior hourly low, right? Don't just take that. Take out London low at least. That's London low right there. But come back down here and take out all the stops for me. Take out that 3188 and let me write it back in. Or the inverse, right? So this was London high. Overnight high right there. We did take that out, but come over here. If I'm going to short and I'm going to risk, help me out with taking out a key hourly level or making it perfect for me to get set up. Right now you could argue, well, Simon, it didn't set up over here. I am not saying don't take this. What I am saying is if you'll wait for those key perfect setup locations, right, not just the prior hours, but actually let it stretch to take out old stops that are very firmly entrenched, right? The older they get, like wine, right? They get better over time. So that when you take out 1, 2, 3 hours worth of stops, and you're only taking out 1 hour worth of stops, they're weak stops, right? But when they bake for a while, when you let them age, they really have a lot of power, right? They really have a lot of power. Like when I'm looking over here, I'm going, okay, this is not the peak. I'm looking right here. Not the peak, but it's damn old, right? This is old. This is old. It hasn't gotten there yet. This is old. This is way old and beautiful if we could get to it, right? That's what we're looking for. These are way old down here. I want to see these taken out. And then what's the problem? Well, the concern is always that it's just going to do this, right? Well, that's true. That's what your stop is there for. It might just do this. But when it does that, we usually don't get set up on the long, right? That's just how it works. So the last piece is I have taken up the practice in the morning before I come in here of lying down, closing my eyes, and visualizing exactly what I'm looking for, right, for my trade. And you should be doing the same so that when you see it, you go, hey, I know that. That's what I'm looking for, right? That's what I'm looking for. And then the last piece, if you're in the room with me and I'm trading, as you see, when I'm on a roll, I get more and more aggressive with my entries. When I'm not on a roll, I get more and more conservative with my entries, right? Why? Drawing down sucks. I don't want to draw down. I don't like working for free. I'm working for free today because I drew down a little bit last week, right? I had a good Thursday, nothing on Friday. But I'm looking to start the week off strong, right? And I know that we're primarily imbalanced. So the last thing is I prepared myself emotionally. It's going to get slow. It's going to get grindy. They're going to wait. And what we're going to do is go on this wait thing, probably, to see what the president says about his stimulus plan, his next round of stimulus checks, right? So that's my 2 cents. That's a coaching session for this morning. I cannot stress enough, if you get below a prior day's low and you take out hourly stops and you get the algo signal, hold your breath. It is usually worth it to take the stop if it doesn't work. Let the thing run and get paid. Strongest recommendation I have. So, or suggestion, I guess would be the better word. Anyways, let's kill it here. Again, this is my trade plan. It works for some people. It doesn't work for everyone. Right? Take what you like. Leave the rest. I'll post this up so people can watch it again later.